This is Dennis with the Active Trend Traders. Welcome to After Market Monday. It's 10 after the hour. Let's see what the market's provided for us today. I want to remind everybody that all the materials that we do present are for trading purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance does not guarantee future performance. So our objective of After Market Monday is basically to take a real, timely and action look for actionable intel at the beginning of each week. What we do is basically in this session is basically we kind of highlight what we're looking at. Now, of course, premium members will get the alerts and all that kind of stuff, but I don't mind sharing, some of the other stocks and ETFs that I am looking at for particular potential trades going into the week. But again, premium members, you get all the alerts, get all the when we're going in and getting out of entities all the time. So we'll do a real quick market review. More downside with volatility. Surprise, surprise. Stocks and ETFs, any of those setting up. And we'll get into that shortly here. Here's where we're sitting as of about 12:15 Pacific time. The markets continued to sell off after I'd taken this slide. Kind of interesting. We want to always remember there's 4 trading outcomes for any trade, and recognize that in a way we don't control these outcomes. However, we do in a way also. We can win a little, we can lose a little. We can win big or we can lose big. If we will eliminate the lose big by trading a really good mechanical system with appropriate stop losses, then we've eliminated number 4, which is our biggest risk and your biggest risk. And typically, with active trend trading, we have been able to keep our ETF and stock trades where we have a no more than a 5% downside. But typically, we're oftentimes out of trades that go against us with 2.5 to 3%. A quick reminder: we have gold seasonality going on, and just a real quick sneak peek here, because what I'm doing is I am going to be providing the triggers on gold for non-premium members. But here's what we're looking for. Basically, as you see, there tends to be a slight, downward bias from April into May into June, and then a basically somewhere between the get rid of that. There we go. Sometime between May and mid part of May to the end of July. There'll be a reversal, and gold tends to get a nice bid going from the end of July into, either through September or into the early part of October. What can a move? If you're looking at trading, what we do is we trade the gold miners, but you can also trade GLD. And so somewhere in this area, once we get the bottoming pattern taken care of and we start catching a bid, it's a great place to jump on a trade with either GLD, that would be either buying the ETF itself and or buying options against it. We like JNUG as the directional for the gold miners. And then also you can take a look at GC if you are a futures trader. Last year, the one future contract, if bought at the proper time down here at the lower level and let it run through this end of summer, early fall run, would have gained a person about $15,000 with one contract. And so not a bad thing to be looking for. The other way we like to trade is JNUG. JNUG 4 times last year, multiple times last year, but it got these really nice moves, and we just want it keeps repeating itself year after year after year after year. So even if only half these gains would have been captured, $1,000 would have grown to $2,811, after these 4 moves. And then secondly, on J-Dust, if gold isn't going the direction we want it to go, we can also, since it has the inverse, we can trade in the other direction. And it also provided an excellent opportunity. Short-term trades, swing trades only. $1,000 grew to $3,200 by capturing just half of these 4 trades. And you can see there's multiple other trades in here. I know some of our members have traded, been trading the gold ETFs, the minor ETFs, and doing exceptionally well. And they're just basically sitting, waiting for the triggers to happen, and then basically taking the trades and keeping things tight. I've shared this chart with everybody last week and a couple of weeks before, and it's just a good reminder. I don't think we can show this enough, although this is probably the last week I show it for a while. But towards the top of a market, we basically get some euphoria, followed after a failed rally of complacency as the market starts to cool off. You know, my question for you is, where are we at right now in your own mind? Because each one of us has to make the decision, but please make the decision with the information that the charts provide us. And then towards the bottom, which is the point of maximal financial opportunity, what emotions are being expressed? You know, well, anger, depression, disbelief, as the market then sells off. Are we going into a bear market or not right now? I don't know. I mean, clearly we could be, but you tell me. Let's take a look at, here is the chart. Here's the lows back from 2016, a really nice market rally. So where do you think we are compared to the chart I just showed you? This is a weekly chart. The chart I just showed you is also a weekly chart. So I think there's some similarity, and I think that this week, what do we have going on? We have the Fed. The Fed, it's about a 90% chance that the Fed will not raise rates this go around, but they're looking at potentially raising rates 2 more times before the end of the year, once in June and once more towards the December timeframe. At what point do the increases in the interest rate jeopardize the rally or the movement of the stock market? Perhaps we're already there, but we'll see. Again, I'm waiting until after the Fed to do anything major this week, because we're approaching an area with the volatility that's in the market where there can be some very huge swings due to what the Fed might be doing. And so we'll just take a look at that. But a quick peek at this, and let's give it we had a run up, real strong run up, pull back to the 40-week moving average, which equates to the 200. Failed rally, pull back down. Not quite a lower low. Now we're pulling back up and really struggling to get back up into these past highs. And so on the S&P, we'll see if we roll over here. If for whatever reason, if the Fed does not raise rates this coming Wednesday, but the new chairman, after the decision news conference turns out to be as bad as some of Janet Yellen's were, we might see continued market weakness. What's interesting is the earnings have been coming out lately have been not too bad. Okay, let's get over here too. Okay, setting up for the week. We're waiting for the Fed and Apple earnings. I think that there was a great reason to pause today. One, into the month, but not into the quarter. So end of the month can have some some negative bias to it, and today we definitely saw that. Apple earnings after market tomorrow. What's going to happen if Apple earnings, since it is a big part of both the S&P and the Nasdaq, if they disappoint? I think that both the Nasdaq and the S&P is hair triggered to the downside and that would be the response to it. Seasonal expectation, volatility continues high, wide range. Wide range moves with little traction. Look for horizontal support and resistance. And what we're seeing, as I addressed last night in yesterday's The Art and Science of Active Trend Trading, the support and resistance that we're seeing, okay, it basically is a tilted kind of perspective in that price action on all three of the tracking indexes that we track is showing kind of a triangle or a wedge type of pattern. Price action stuck here in the middle right now. And so just, if we get price gets up to the roof line, if you will, that can be traded to the downside. If it gets down here to the sloping floor area, the floor support, that's where we could potentially take a bounce. However, as we move closer to the end of the triangle, these moves get much, much tighter as the spring coils. Spring will coil for basically, as we move towards it, we will coil, and when it rips out of this, it's going to rip out of here one way or the other pretty hard. So that's what we have going on there. Bonus trades, waiting for setups on JJug or JDust. Strategy 1, strategy 2. And with the active trend trader, we've got 3 strategies, 4 entry rules, 6 exit rules. And strategy 1, we basically like to trade the stocks and ETFs. So we have had a couple of good trades. We're in one trade right now with oil. That's doing exceptionally well. Strategy 2, we try to generate income trades. For the average through midway through the month of April, we're averaging about $488 per week on these trades. And then strategy 3, we've got 37 weeks left before these leaps expire, and therefore I've got to get busy basically refining the process so that we can generate some additional income here to pay for these positions and generate income. The market has not been helping us much with that because of all the volatility since almost the last part of January. So let's look at some charts. Let's see. Let me look at some questions. For premium member support and resistance data, not in site or in email. Gary, that will come out. Which part of the support resistance are you talking about? Anyway, if you can let me know specifically. It does come out on the go, no-go. Yeah, it comes out on the go, no-go, which comes out on the radar, on the radar page. And that's the little webinar, or little recording I do every week that talks specifically about how things are setting up and identify the levels of support and resistance there. Okay, let's take a look at a couple of charts here. What am I looking for? There we go. Okay, this is SPY. As you can see, the spiders came down, and basically we are now in a position where we are ping-ponging between moving averages. The 50-day moving average is working nicely as resistance. We got a big sell-off today, pushing ourselves down. Where is it likely? Where is it likely to go? Well, it's likely to go down here to the 200-day moving average, or can reach down here to this lower level trend line. And this is basically the triangle that I've been talking about, where you can define the. Now I drew this off of a shorter time period chart, and that's why it seems like it's away from these candles. But and you can always take and redraw them again. I can sit there and redraw them and say, okay, well, that actually on a weekly chart that is actually there, and then I can erase that one. There we go. And that lines up pretty nicely on the daily charts also. So I'm not ready to jump on either long or short. We're in the middle of the triangle. That tends to be a place where the meat grinder comes into effect. And there's no reason to in reality do anything until we get past the report from the Fed on Wednesday, and then we'll look for setups. If in fact intraday on Wednesday we get all the way down here to this lower level, that would be an ideal place to potentially take a long position. If by chance we get it rallies back up into this area, that would be an area where we'd be looking at taking a bearish trade to the downside, and we could do that either by a spread. We would sell a what would be called a call credit spread, or in other words, a bear call spread. So that's what we've got going here. As you can see, momentum has just kind of is going sideways just below the zero line. Momentum ticked up, is bouncing off the zero line, which is oftentimes a huge sign of weakness, and is bouncing back down to the other side. NASDAQ, I don't want the NASDAQ, I want the Qs. So similar type situation. I drew this fib line in here when we made this swing low from this swing high, and as you can see, price actions have moved up, just per Dow theory almost, and it just turns out that it's the 618 retracement, but it's pushed up to the 618, reversed, came back down, and is bouncing, bounced off this support area, which equated to, it was kind of like in between the 200-day moving average and the 100-day moving average, but now it has basically dropped again back below the 50, the yellow, the 820 combo, the 100, and we'll see if it takes out this support here at the 160.2. Again, we can, let me get rid of this real quick, remove drawing. We can, again, draw this line up here through here, thusly. Draw it down through here. And this is just a little tip on drawing your trend lines. Trend lines is kind of like an art, if you will. When I have a wick that sticks up, if I can draw from this point, my high point, to a body, I like to do that. And sometimes you'll see where you get a Pinocchio effect, where the wick of a high popped up through the line, and that's okay to do that, because we know that the trend line down, this line of resistance, ceiling of resistance, is kind of a range. It's a zone. Just always keep that in mind. And so TSI, again, also rolling over on the Qs below the level. Where is TSI, correction, the price action of interest to us? Closer to these lows. Or we do have this level of resistance somewhere in there. Oftentimes, if we're going to break out the top side, we will come down in here, rest, and then go from there. So if for whatever reason we get into that 160 to 159 area and it just kind of goes sideways, we may see a bust out to the upside, depending on what the Fed does. And also, what does Apple do? If Apple comes in with really poor earnings, watch out to the downside. IWM had been holding up really nicely. It basically was above the 50 and was holding at 50. Today it closed below the 50, so it has now broken the 820 combo, the 50, sitting really close to the 100-day moving average. And I'm going to get rid of that because we don't win. I'm going to leave that there for a second because that's level where the sellers came in last time. Just keep an eye on what we have. TSI on the weekly chart has turned over. And again, TSI on the daily never really got a tick up with that the hammer right here. Never got a tick up there. And so now is rolled up and dropped below the zero line. And in the definition of learning how to use the TSI, that is considered that it has gone into a downtrend. Hold on, please. Okay, so again, it too, okay, if we get rid of all these other lines here where they had a nice breakout, it also, that is the Russell, can also be lined up with a, kind of like a little wedgie, like a little wedge going on here, wedge or triangle. We get rid of this now. And so as you can see, right in the middle, and this area that's in the middle, you need to go to the intraday charts to see if where we're going to get a bounce, or see if it's showing any kind of strength on the intraday. Because if it's not, we just wait for it to get down to these levels. And sometimes that's just a good advice to do anyway. Just wait till we get a reversal signal, TSI tick up, and at least a TSI tick up to show us that the momentum is changing. So for those of you who were trading Grub, Grub beat us up and knocked us out on one of our trades on a stop loss here, but we did buy some calls on that over here 2 weeks prior to earnings. We closed that position out today, the remainder of that position. So that position was up about $220, correction, $660, and so that was good. NVDA is another entity that we want to be watching, in that it has earnings coming up on 5/10 after market closes. But as you can see, this is putting in so you can just draw this line down through there, and actually we can, I can take the body and it go to there. So we've got a downtrend roof line, ceiling line, matched up with the 50-day moving average, plus earnings coming up. I would like to see it get down to about the 220 level, or at least hold there at the 100-day moving average for a bounce. But again, if Apple gets whacked tomorrow, watch for some of these other tech stocks to do the same thing. So Apple actually got a nice little bullish move, engulfing pattern. It may do a nice little sympathy pop tomorrow, up back into the range about 170 into this resistance, and then at that point it could go either way. I will not, Apple has just about lost its luster as being a good tech stock. It still moves a lot. It's still an excellent company. Well, I have to say that. I don't know if it's an excellent company or not. Sure. It's a great brand name. People love their apples and all that kind of stuff. I'm not an Apple person myself, but that's okay. And they will continue to provide that good product. But, there's not been a lot of noise about any of their new products that I've heard that have been hyped up that much. And so just keep so earnings this time could go either one way or the other. Earnings from last time fell out of the sky after earnings, found support, rebounced. And so as long as we're sitting right here, one of the things to keep an eye on, and I hope everybody is trading these Keltner channels and or the moving average envelopes. The moving average envelope from the 20-day moving average is plus or minus 10% on a daily chart. And so if something is well within that and it's not touching that line, it's showing us it's not a very volatile stock. That's one. Secondly, is when price, go back and assess and evaluate what happens to price once it breaches or gets close to the top or the bottom of the Keltner channel. Does it tend to bounce, or does it tend to fall on through? Oftentimes, what we see is the Keltner channel themselves will contain about 85% of the price action for a particular stock or ETF. Therefore, when we're at the extremes of the Keltner channels, if we get a reversal signal, that's oftentimes a good place to go ahead and let's get in there. And also, that's a great place to monitor and place your alerts. It works really well that way. Okay, covered Apple. I talk about NVDA. I did. Another one, YY. Okay, YY. And this is the last one I'm going to cover today. YY. YY. On Thinkorswim, it shows earnings are coming up on the 10th after market closes. However, YY. That would be out of sync with when it did its past earnings, which was on 3.5. Because if you put out there 3.5, adds 3 months to it, that puts you out to 6.5, and so this may be totally wrong. And so just be aware of that, because last time it was on 11.14. And this is one of the Chinese companies, so it's a little bit flaky on when it does its earnings, and so that actually turned out to be 11, 12. So it turned out to actually do earnings about 3.5 months later. And so anyway, right now this is a speculative guess, but it's put in a really pretty nice little pattern here. See how it bases and pulls back into this area, and it may get us a nice little run into earnings. And it is a very volatile stock. I mean, right there, that little move right there is about $9 and equivalent to about 10%. So YY. We'll see if we get a nice little pullback into these areas here. We already had our TSI tick up over here, positive divergence there for this hammer. And so it may turn out to be a good pre-earnings run type of stock. So let's see, LABU. Whoops, LABU. There we go. LABU is the leverage ETF for the biotechs. As you can see, it's also getting whacked, Eric. Basically, a series of lower highs. We put in a lower low here after this thrust down, and it tried to basically recover here. Got right up to the 50, fell back down, got up to the 820, fell, and 100 has fallen back down. That's 100. Is that made it 200? It's dropping below the 200, so that's not good. Yeah, that's the 200. So it's dropping back below the 200. Again, watch it. What's it going to do when it gets down either to the Keltner and or to the moving average envelope? And so as you can see, this LABU blankets both the Keltner and the moving average envelope. And so it is very volatile, but if you get yourself caught into this one at the support floor or flip it over to LABD at the at the resistance ceiling of the biotechs, you can pick up a nice little move. And so right now, just got to tick up on it. And one could, a couple of things you could do. You can basically draw a line in here, see how this is going to work. And I'll actually take the middle section of this entity right here, which is about the $34 level. Size your position. If it gets back into that level at the 820 combo, or maybe just pull back to the 50, that would be a great place to be entering. And where's it going to trigger to? Well, possibly get a nice run from 35 up to, 40, or even up to 45 if biotechs go in the toilet. So, okay, my friends, I've given you some stuff to think about, look at for the week. I will be coming back online after on Wednesday. We do have a premium training session on Wednesday, and our regular sessions on Friday. So with that, God bless everybody. Have an absolutely excellent week, and have a good May Day tomorrow. Aloha.